Hi, welcome to my channel. I represent Kip Capital Management, and the company I wish to cover today is Humansoft Holdings. Just a disclaimer before I begin, I do not hold any positions long or short in this company. Quick overview of my investing philosophy and process. I seek outstanding businesses that are outstanding investments, and it's crucial to know the difference. I look for businesses that have high relative returns on capital compared to their peers, which are protected by economic moats and strategic positioning. And I prefer industries that support secular growth instead of ones where players are resorting to taking market from each other in a relatively slow-growing pie. The financial metric that is at the center of all my research is growth in EVA per share. EVA stands for economic value added, which is adjusted NOPAT less capital charge. And of course, there is the iron rule of finance at its core. The value of any asset is its discounted future cash flows. And I use DCF powered by strategic analysis to read market expectations, which I'll get into a little more detail in a minute. And I conduct scenario analysis, expected value, in order to triangulate a value range. And then on top of that, finally, I seek a margin of safety that allows for superior returns. So let me start for Humansoft with the end and tell you my final thoughts. Humansoft has had a stellar decade as a higher education system of two centers, a university and a college. Over the last decade, they've done exceptionally well, largely because of being in the right place at the right time 10 years ago. These lucky circumstances, if you will, include the state of Kuwait offering generous scholarship payouts, a large government leased property, and a overall undercapacity in the market for higher education, together led to impressive and profitable growth for Humansoft. The luck has now run out, which is reflected well and justifiably so in Humansoft's market value and its price. The market is no longer convinced that Humansoft can have the growth in student population while competing capacity is rising with other private education companies. And Humansoft strategically remains at the mercy of the Private Universities Council, which is the department of the Kuwaiti government that manages scholarships for private universities. My stance is bearish, and I recommend a no buy. I call it a 3-star business in terms of its quality and a 2-star investment. So let's get into the details. Humansoft, as I mentioned, is in the education services business. It's currently trading at just under 400 million KD, which is about $1.3 billion. Its enterprise value is a little less because owing to about 60 million KD of cash that they have on balance sheet. Trading at 7 times earnings and 3.5 times book. Their sales level at the moment is about 86 million KD, and they're trading at 3.2 KD as well. So let's begin by double-clicking a little on what the business is about and what the model is really. Its product, as I mentioned, is these 2 higher education institutions that are the American University of Middle East I'm going to call that AUM, and the American College, beg your pardon, of Middle East, which is AUC. Now, AUM is their flagship school, and it makes up about 86% of their sales. The only other center that they have is the college, the American College of Middle East, which is the remaining 14%. Their customers, really, they have one extremely large customer, which is the Kuwaiti government. And the reason this is as though, although they have the overwhelming majority of their students are Kuwaiti nationals, over 90% of their student population is on government-backed scholarships. And therefore, their true customer continues to be the Kuwaiti government. To a lesser extent, it is the remaining 10% Kuwaiti students, individuals who are self-paid, but they, of course, are in the minority. And the industry, as I mentioned, education services, they cover undergraduate and graduate programs, specifically in business and engineering schools. They operate only in Kuwait, and their overall status in the market is as the largest private university in Kuwait. I want to underline private because the state school, which I'll talk about in a minute, which competes with them, is about 2.5, 3x larger. That's about it as far as the basics of the business. Let's get into the past and how they've done over the last decade or so. As a university, they have done exceptionally well. Their returns on capital have risen from what were back in 2011, they were in the high single digits, which rose to mid-20s and continued to rise to mid-30s and at an average of mid-40s in the last 5 years. And the primary reason this has happened is as a result of operating leverage. So they had this enormous campus which is on government leased property back in 2011, when it was a relatively new university. It was just 3 years old at the time, and at the time it had more or less 12 to 14,000 student capacity. So as a brand new university that opened up, had made the initial investment, the pre-production cost, as they say, as long as it managed to enroll more students, the margins kept on rising, and as a result, so did the returns on capital. So it really benefited from that, since at all levels of their revenue model, their tuition, their number of students, all kind of went up because of some of the characteristics in the market that I mentioned. And Humansoft, not particularly because of some incredible strategy or moat, but simply as a result of being in the right place at the right time, has had a great past. So top line, just to put a few numbers to it, has grown 24% year on year over the past decade, but slowed considerably over the last 5 years at 9%. The stock has performed just 2% CAGR since 2016, but 29% CAGR over the past decade, which implies that from 2011 to 15, they had this enormous correction in the expectations of the market. And that really makes up the lion's share of the performance, the capital gains that it has had over the last decade. I mentioned operating leverage. It's quite crucial. Their returns, it mentions here, by the way, I'll put this slide, I'll put the entire presentation in the show notes of this episode and of this video. And so you can, you, dear viewer, can go ahead and view it after the presentation too. But last, I want to mention gross margins have been consistently in the mid-70s, and the lion's share of cost of goods sold are staff salaries. So it's been a pretty great decade, both fundamentally and the market has then gone ahead and rewarded Humansoft for that. Now, I'm going to paint a picture about the industry landscape by talking about competitors. So the way private education, the way higher education works in Kuwait is there is the one and only flagship state school called Kuwait University. And Kuwait University has a capacity of between 35 and 40,000 students. It currently enrolls 35,000 students, and it is the number one desired school for most Kuwaiti students who wish to study in Kuwait. It has been and continues to be first choice. Now, the AUM-ACM, the HS system, comes next. Now we're shifting into the private sector of higher education. And the HS schools are by far the largest after KU, and they currently enroll about 14,000 students. And there is the data shows that they have nearly maxed out on that capacity, meaning that their campus can at best take only the number of students they enroll today. So they're full up. And this is an important detail we'll discuss just a bit about future growth. The next three private schools are 3x to 4x smaller than HS. They make up about 9,000 students. And the remaining small, 6 or so small schools are another 6,000 students. So it's sort of this cascading picture where the about 50 to 60% of the market is taken by KU. 6 out of 10, 2 out of 10 students attend the HS system, and another 2 out of 10 attend the remaining private schools, both medium-sized and small. So this means that Humansoft controls about 20% of the market. It's safe to assume that the Humansoft and most other campuses are more or less operating at full capacity. And now comes the interesting part. The capacity change that has taken place in the last year is crucial to really the HS thesis, which is KU has gone ahead and opened a brand new enormous campus of about 5 million square meters called the Sabah al-Salim University City, also known as the Shadadiya campus. So important to note that KU's existing system had 35,000 student approximately of capacity, and the new campus is not meant to add but replace capacity for KU. So the Shadadiya campus has a capacity of about 40,000 students. All students have now fully, and it is operational, fully up and running. All students have moved to the new buildings, the new campus. The reasons for this were they built a campus in a location that was not in the way of rush hour traffic, and the fact that it's all in one place rather than the previous KU campus where buildings were sort of in different areas, which created inconvenience, especially for the faculty. So there is talk of the older KU buildings, which are perfectly usable, where the government is discussing the idea of building a brand new university outside the KU system and adding capacity, but that could be as much as a decade away. the important thing to remember finally is that although KU has a brand new campus, which probably makes it desirable, even more desirable than it already was to Kuwaiti students, it has not added overall capacity to the industry as such. So, is there a strategy or moat that protects Humansoft in any way? I don't absolutely. I'm positive that there isn't one. Whether in terms of academic excellence, faculty quality, program options, campus infra, or degree reputation. At none of these domains does HS offer a particularly great deal to its students. It's a standard quality university, so there's certainly nothing wrong with it, but KU is still in many ways preferred, probably because of the fact that there is probably some network effect going on, in the sense that a lot of students do attend KU, and Kuwait is a small country, and there is probably a desire to stay closer to that largest network of faculty and students, that is KU. And it probably has a better tie with the job market, both state and private, that comes after university. So the career development and so on is probably more desirable. HS relies entirely or almost entirely on a single client, which also happens to be its biggest competitor, which is Kuwait University, run by the government. Let's shift our discussion towards towards forward-looking statements. And for Humansoft and the private education industry in general, there is not some significant market growth that can be expected. So that really makes it problematic for Humansoft in that Kuwait doesn't draw or attract any international students, and so any base level growth in students would probably be closer to the overall growth in population. Because of this, growth could potentially be expected from market share capture from competitors, but there doesn't seem to be any particular strategy in place that would allow HS to do that. So with the Ministry of Education having all the negotiating power as far as tuition is concerned and the scholarship payouts, combined with that slow market growth, and this is already evident in the fact that the last 2-3 years, student population growth has slowed way down for HS. And although in the past they have convinced the ministry to raise tuition by 1.4x over 10 years, it seems unlikely that this can be repeated. An interesting uptick that you may find if you were to look into Humansoft's numbers is during COVID, specifically for fall 2020. It seems that the high school system in Kuwait lowered the passing rate because of online school and the other disruptions that took place because of COVID. And what is normally a 60 to 70% passing rate jumped to 98%, close to 100%. And this led to an unusual influx of about 8,000 students in the higher education market for fall 2020. It benefited not just HS, but all schools that I mentioned earlier, all schools in the market. This is worrying in the sense that it has likely brought down the quality, average quality, student quality at HS and all its competitors. Secondly, it seems like a one-off situation because sell-side analysts, market participants believe that this is going to revert back to normal now that in-person school has continued. So let me give you a note on management and my thoughts on it. Granted, the only source I had to run a litmus test on the management was their most recent earnings call, and what I saw there, I found underwhelming. I was more or less unimpressed by management. Granted, only one executive team member attended, but some analysts asked some good questions and about competition, about forward-looking statements and fee changes, capacity enhancements, and it seemed that they had this blanket answer to dodge that question, saying we want to avoid speculation, so we won't be making any forward-looking statements. It's likely the reason the price today is as pessimistic as it is, and I'll talk more about that in a minute when talking about market implied expectations. But questions relating to any view, any of the biggest challenges that HS should expect in the next 5 to 10 years were met with vague, muddy platitudes. So there was a lot of self-congratulating over their recent university rankings, and some cliches like we value quality over quantity. These are bad signs in my experience. There was no robust, thoughtful strategy in place, and there doesn't seem to be. So I think that's part of the reason that is defining the market sentiment as it stands today. So let's get to price implied expectations and a few thoughts on valuation. So the basic way that PIE works is I take the price as it stands today and use DCF to reverse engineer what the market says about the forecast period, given consensus estimates. So when I do that, it's so incredibly pessimistic today, where it's simply assuming no growth, less than a year of growth in sales, which I believe is the turbo trigger in this case for Humansoft. So when I decided to unpack that sentiment a little bit more, and I found that for 3.2 KD as it stands today, it's really implying an 8% year-on-year sales decline over the next 9 to 10 years. And the only possible reason I can think of for the disconnect between consensus, which is about 2 to 5% top line growth, and this, what the price implies or what the market sentiment is the fact that I believe market is taking a longer time horizon than consensus is. So, as far as the narrative is concerned, do I think HS is going to be around a decade from now? Likely. Will it be as profitable as it has been? Possible. Maybe probable, given its relationship or track record with the Kuwaiti government in the past. But it remains murky, and it's risky because all the negotiating power lies with PUC. So one KU staff member that I spoke to talked about possible budget constraints, which would of course be influenced a whole lot by oil prices. And in that situation, I don't see why it would be so difficult for the Kuwaiti government to say, well, you guys have had this nice 50% op margin and your really high free cash flows that you've been sitting on. We're having budget constraints. Maybe we can slim that down for you. So you guys will lower your scholarship payments. And I don't think HS would have much to say in that regard, because in 1 year over, I believe it was 2016 or 17, when I spoke to a Humansoft professor about it, he mentioned that there was a change in policy related to scholarships, and just because of that, there was a dramatic fall in the number of students who even enrolled at HS. Kuwaiti students have come to expect the scholarship program, whether to KU or private schools, as a given. And so when it isn't around, they probably search for options elsewhere, or maybe even studying outside of Kuwait. Do I believe that, as the price implies, the HS will house fewer students? It's possible, given the fact that capacity keeps rising both at KU and other private schools. 8% sales decline, by the way, when unpacked, says that the student population, which is about 14,000 students, would drop to 10 in 5 years and to 6 in 10 years, which frankly sounds a bit too pessimistic, but I'll talk in the next slide about why I still remain bearish about this company. So for valuation, I took the most reasonable estimate, given all the market dynamics I mentioned. Given that the Shadadia campus is not an addition but a replacement of capacity, and overall it would be fair to assume a range of 2 to 5% organic growth in number of students, and the Kuwaiti government would have no choice but send the spillover, or a majority of the spillover, after KU seats have been taken, to send about half of the spillover to the HS schools. Because of this, 2 to 5% is a reasonable growth, but I went about it in an absolute sense. So I said, a fair assumption that over the next 5 years, HS can grow number of students, net number of students. Remember, there is, of course, a turnover. There are final year students that graduate and freshmen that come in. But net growth of 500 students a year, which, given their past, is not a stretch. That's a very conservative view. Assuming that, you get a range of what would be a 10 to 12% year-on-year return. So the 3.2 would grow to, or you'd get a value range of about 5.3 KD to 6 for a 5-year horizon. And I think that although that's all right, that sounds all right, and possibly implying that HS is undervalued, I believe this is a risky situation. Should be avoided. I'll tell you why. There are the 5 forces situation, which I've mentioned a number of times just because it's crucial to Humansoft's strategic positioning. The fact that they have the single customer, which is their competitor, and there is so little visibility on whether they can maintain this level of tuition, or they don't have much say in whether they'll be able to draw more students than before. And finally, the fact that it can be derived from the fact that Humansoft has refused to add capacity over the last 5 years, even though they've always known that they're reaching their maximum capacity at 14,000. So that alone is, although they don't make explicit statements, it's indicative of the fact that they don't believe student population is going to grow dramatically either. So given all this, it seems that there are enough future outcomes where things don't turn out well for Humansoft. And so I overall remain bearish, and to bet on the board, institutional owners having political might that would lead to higher tuition or something like that is not a game that I would recommend investors play. So finally, I would advise staying away from this one. Its economic profits have been great in the past, but there is a built-in fragility that makes this case worrying. And that brings me to the end. Thank you very much, and I'll see you next time.